Hello and welcome to CEO.CA's Inside the Boardroom. Today I'm with Paul Harbidge, President, CEO and Director of Faraday Copper. Faraday trades on the Toronto Stock Exchange under FDY. Paul, thanks for being here.
Great to be here.
Paul, as always, we like to start off with a company overview here at Inside the Boardroom. So can you take it away?
Yeah, so Faraday, as you mentioned, is listed on the TSX, and our flagship property is Copper Creek in Arizona. It's one of the largest undeveloped copper resources in the United States that's still in the hands of a junior. We have 4.2 billion pounds of contained copper in the measured and indicated category, and almost 5 billion pounds as a total resource inventory. We've got a lot of exploration upside, which we're currently drill testing at the moment. And I think importantly, it's also, to note that we are a Lundin Group company. We've got three key strategic shareholders on the register, as well as the Lundins. We've got Murray Edwards and Pierre Lassonde. So that really helps to, rubber stamp the company and the project that we've got. And we're fully funded to deliver on our key strategic outputs over the next 18 months, following a $23 million financing in May.
Yeah, and the partners point is validating, so thank you for that. I'm curious to understand the history of the company and also how you got involved.
Yeah, so I got involved and took over the running of the company in September 2021. It used to actually be called Copper Bank Resources, and it had been set up like a bank to store copper assets when the price was low. So it was essentially almost a dormant company trading on the CSE. It had a couple of copper assets in. There was no management team. There was no work being done. And after being introduced to the founder, did a full due diligence, really liked what we saw. And as I say, took over the running in September 2021, built out a full management team, and then really got underway with the technical work. And we put together all the historical data. There was over 200,000 meters of drilling on the project, and that really helped to de-risk it and see the vision of the project. And we then put together an updated mineral resource estimate that then supported an initial PEA. And we did that for two reasons. One was to demonstrate that there was an economically viable project here. And then two, importantly, it really highlighted to the management team what were the key levers we needed to focus on to really drive value going forward.
And Paul, I know you're in phase 3 of the Copper Creek project. Can you give us details on how it's going and also what's going to be happening for the remainder of the year and going into 2025?
Yeah, certainly. So we're underway with a 20,000 meter diamond drill program. And we have two styles of mineralization on the project. We have these high-grade breccia pipes that come and are exposed at surface. They have more than 1% copper in the core, and then they have a lower-grade envelope around them. And this is what could be mined by, open pit. And then we have the porphyry-style mineralization at depth, which is a series of quartz veins hosted within a porphyry. And so what we see as a real value driver is adding additional open pit inventory. So very much focused on the sort of 0 to 500 meters depth potential. And we've also said that, over 95% of all the drilling done on the project to date has been done in the resource area, very little outside. And we see a lot of exploration upside in the district. And on that point, at the beginning of the year, we made a new discovery in Area 51. That's about 800 meters outside of the resource area. And we've got high-grade breccia pipes that are exposed at surface. And we continue to drill there to both laterally and at depth to define the potential resource. And then more recently, we've been drilling in the American Eagle area. And this is at surface above the American Eagle underground resource. This is an area that hadn't been fully drill tested before. They'd drilled vertical holes to test the veins within the porphyry, and they hadn't tested the breccias. And we've made a new discovery in the Prada breccia, which is from surface. We've got broad zones of mineralization. Again, we're now starting to define an area that's 200 meters by 300 meters that's got grades all above cutoff and show the potential for additional open pit. So, really exciting to be doing that drill program. So watch this space as we continue to drill and get results out from the American Eagle area as well as Area 51. And we're also going to be heading further north in the property to an area called Rum as well, where we'll be drilling later in Q4. And then the idea is, phase 2 drilling, after the PEA last year, we had 10,000 meters. We've got the 20,000 meters that we're doing now. So altogether, we'll have 30,000 meters of new drilling that we aim to wrap up into a new mineral resource estimate in Q1. And then together with new metallurgical data, together with gold as well, then we're looking to update the technical study in the sort of second half of next year, where we're envisaging a potential 50% throughput increase. So from the 30,000 tons in our initial PEA up to 45,000 tons. So, a lot of work that's happening on the project, a lot of news flow to come, and exciting times.
And I was just about to say, while you're talking, I'm thinking that it's a very busy time, an exciting time, but especially for investors who've never come across FDY before. Why now? Why get involved here in 2024 or beginning of 2025?
Yeah, as I said, we've got a lot of catalysts, whether it's the drill results, an updated mineral resource estimate, or and then leading into the updated PEA as well. But I think also importantly, as we're sort of starting to go through, the election cycles in the Western world, interest rates are coming down now. The big push and drive towards the clean energy transition, and particularly somewhere like the United States, ensuring a homegrown supply chain, going from the raw material to the finished product. And so, the fact that, we're in Arizona, it already produces 70% of US domestic copper. We've got another project that will be, ready in the development pipeline to continue to provide a source of copper to the US economy as it really drives home this clean energy transition.
And knowing you may repeat yourself, but to close, I would love to get a take on copper as a whole right now. Investor confidence shaken because of weak demand in China. However, fundamentals are still intact. What are your thoughts?
Yeah, no, I think, look, the way I see things is, the clean energy transition is almost like a new industrial revolution. And whenever you affect change, generally people don't like change because it puts them out of their comfort zone. And so they say no. And, we've sort of seen a little pause in this clean energy transition, haven't we? Sort of EV sales have sort of dropped off. There's question marks around the fact that the infrastructure's not been going in to support charging. Companies are starting to rethink about whether we go back to more hybrids. Governments have been reneging on their commitments to, stopping combustion engines. And so I think, it's not happening as quickly as everyone thought, but still, when we look to the future, it is what's going to happen. It's taking a little longer, but it still bodes well that, strong support for copper demand, not just for, EVs, but, updates to the electrical grid, smart housing, smart grids, all going to need substantial amounts of copper. And so it's really just a matter of time until we start to see further upswing. I mean, when you think about how many new mines need to be built, then there's very few that are happening at the moment. And so we're providing that opportunity as we go forward. So a great time to invest into Faraday as we've got all of these catalysts to come.
Great. Well, Paul, thank you for being here. That was Paul Harbidge of Faraday Copper on the TSX under FDY. Thank you for watching, and we'll see you in the next edition.